Hello there, entrepreneurs, and welcome to another episode of the Ndalama Insights Business Show with me, Mukonki Mukonkela. In today's video, I want to talk about ways in which you can finance your business idea and how you can go about choosing which financing best suits your needs. Let's get started. I hope that in today's video, you can get a few insights into how the financing of businesses actually works so that you can stand a better chance of finding financing for your business. Financing that is affordable and that suits your business needs. I would like to start by looking at the different funding options. Many people limit themselves to thinking that when we are talking about financing a business, we are only talking about bank loans. But in fact, there are many ways in which you can finance your business. And I want to look at those ways as we start this video today. The first way, of course, that you can finance your business is through bank loans. And when you think about bank loans, you're talking about three major ways in which you can finance your business. The first being term loans. Term loans are bank loans that are for a fixed period of time in which you make repayments both for the loan amount as well as interest. The second bank loan is what is referred to as the bank overdraft. A bank overdraft is simply a facility that allows you to overdraw or for your account to be in negative. In other words, you are using the bank's money to finance your day-to-day operations. The third loan is referred to as trade finance. This is where banks lend credit based on your trade transactions, either to you as a buyer or to you as a seller. So those are the three different ways in which you can borrow from the bank, or you can look at bank loans. Now, as I've mentioned, getting a loan from the bank is not the only way you can finance your business. Let's look at the second way in which you can finance your business. The second way you can finance your business is through equity. Equity is the value of your company or the shares that your company represents. Now, how do you make money from your shares in your company? You sell part of your company on the market to investors. Those investors buy a part or a stake in your company and they become shareholders. Now, the difference between the bank loan and equity is that with equity, you're not required to repay the loan through interest repayments as well as repayments of the principal amount. When an investor buys a stake in your company, they are buying a part of your company. The benefit they will get is through what is referred to as dividends as well as an appreciation in the value of your company that we refer to as an increase in the value of the business. In Zambia, we've got the Lusaka Stock Exchange, or that is the market that allows you to sell a part of your business to the general public. The third way in which you can finance your business is through the 3 F's. These are referred to as family, friends, and fools. You finance your business through the 3 F's, especially when it's just a business idea, when you are just starting off. Because it's only your friends, if you have good friends, that is, your family, again, if you've got good family members, and fools that will allow you to use their money for a new business idea that is not proven. So that is the third way in which you can finance your business idea. Now, I want to talk about an issue that has been discussed in years past, and I believe is going to be discussed even in future years to come, as long as you don't understand the principle behind financing a business. Many people, especially those that are starting out, complain about lack of access to financing. I understand your complaint. It is a valid point. But before you complain, I believe you need to clarify or clear out or justify why funding needs to be given to you. Now, most lending institutions will not lend to startups. Now, let me give you a scenario here. Maybe you are going to understand why that is. Imagine you live in a community and you are referred to as a very wealthy person and you've got 10,000 kwacha to spare. Or you've got 10,000 kwacha somewhere and you don't mind investing it. And then this person, a stranger from nowhere, comes to you and says, "Hey, Mr. or Miss, I believe you're a very wealthy person in our community and I want you to lend me 10,000 kwacha because I've got this brilliant business idea which I think is going to make me millions of kwachas and you and I are going to be millionaires. I will repay you back your amount as well as interest. It doesn't matter how much you want to charge me on interest. I believe I've got this great dream and I will make the money and I'll pay you back even within a year." If you were that person in that community, what would be your response? I would be concerned. I would be extremely concerned because I do not know you. I don't know what your business idea is, whether it's going to be successful, who else is doing what you want to do. I don't know whether you have a team to help you actualize your dream. I have never seen you work. I don't know what kind of energy you have. I wouldn't risk my money on you. So I would politely tell you, maybe not today. Come back in a few years' time. I would like to see how your business turns out to be. Then probably we can sit down and talk. Now, let's flip the coin because many entrepreneurs approach financial institutions or lenders in this kind of way where they come and expect to be funded because I've got a brilliant business idea. I believe it's going to work. Let's flip the coin. Assuming you are that wealthy person in this community, would you risk your money on a person who's a stranger? You don't know their business idea, how successful it's going to be. You don't know what they are making every day or every month. They've got no record in terms of how much they are selling, how much they are spending, what their profit is. You don't know who's helping them to manage this business. Would you risk your 10,000 kwacha on such an individual? I doubt you would. This is the scenario most financial institutions are faced with, especially in developing economies such as Africa. We've got brilliant business ideas that are unproven. We've got brilliant business ideas whose business model we cannot articulate clearly to the lending institutions. And therefore, most lending institutions are risk averse. They are scared to lend money to you because they don't know much about your business and if it is going to succeed. So what do you do? Where do we find money? Where do I find money to finance my startup or my business idea? This is where the 3 F's come: your friends, family, and fools. These are people that love you, I suppose, and would risk their money to ensure that your business idea takes off. Now, when you are starting, when you've got a business idea, if you are a true entrepreneurs have got blood in them that enables them to continue regardless of whether there's someone to finance their business or not. If you have that blood, you definitely find that little money that you need to get your business idea off the ground. And you'd either use your personal savings, money that you've saved. Maybe you were working and you saved money, or maybe you've sold some assets that you owned to start this business idea. So you will use your own personal savings to start that business idea. This is a very good trade because the day you are going to seek for financing, the funders are going to ask you, how did your business take off? And then you are going to explain that you used your personal financing, you borrowed from your family, you had a friend who understood your business idea and lent you a part of their money so that you could start this business. So when you are starting, when your business is at idea stage, you need to look at personal savings. You also need to look at, if you've got good family and friends, look at them as options to finance your business idea. Because I can guarantee you, very few lending institutions will actually finance a business idea. And as I've explained in a scenario, it is very risky. When is it that financial institutions can actually lend to you. Now, before I come to that, let me suggest to you another option. There are organizations that are referred to as venture capitalists or angel investors that invest in startups or businesses that are at idea stage. Now, you can seek these organizations, but you have to have a brilliant business idea with a brilliant business model. And you need to be able to pitch your business idea to these venture capitalists. If you can prove to the venture capitalists that you've got a brilliant business idea and a great business model, you can stand a chance of your business idea being financed. Now, let's go back to when can I get access from these banks? What are they doing in our market if they cannot lend to me as a startup? Banks will be interested in your business when it starts growing, when you have what they refer to as a track record. This is where you are able to prove to the banks that your business idea can in fact bring in money, and that money can repay back the loan that you want to get. And of course, your business has some assets that they can hold to as collateral in case everything falls. They can hold on to that asset as collateral and sell it off if your business does not work. So financial institutions will become really interested in your business the time your business starts proving itself, the time it has a track record, the time you're able to show that you've got cash coming in to repay back the loan that you want to borrow. Now, let's look at when do you actually get what type of loan? At which point do you get a bank loan? At which point do you go to the stock market? I think I've touched on this briefly. When you are starting a business, you need to look to your family and friends for financing your business idea, because at that stage, your business is very risky, it is unproven, and no lending institution is going to risk their money to fund your business. If you are in an economy or a country where you've got venture capitalists or angel investors, definitely approach them, pitch your idea, and if you've got a brilliant business idea, I've seen many companies in West Africa or in East Africa get huge financing for their business ideas. And I believe if you've got a great business idea, you're in a country where you've got venture capitalists, do approach them and pitch your business idea to them. They are in the business to make money. They'll definitely listen to you and fund your business if it is good. So that is how you can finance your business idea. When your business starts growing, you can approach the financial institutions. But even then, you need to understand what kind of financing you should get. You don't just go to the bank and say, I want a bank loan. You need to understand what that loan is for. Some loans are for capital equipment. Maybe you want to buy a big machinery and you're going to repay that loan across a period of time. Then you need to look at getting a term loan. This is a fixed loan which you repay over a period of time in small installments. Do not rush to get a fixed term loan to finance your day-to-day cash needs. This might not be as detrimental as financing your capital needs with an overdraft. An overdraft, as I explained, is a loan that you get from the bank by overdrawing your account or going into a negative balance. So the bank gives you up to a certain limit that you can use their money to finance your day-to-day operations. It's a short-term funding option. It is very detrimental for you to finance your fixed assets or equipment purchases with a bank overdraft because it can turn out to be very expensive. So when you are talking about how you finance your business, your growing business, you need to think about, is the funding that I need for a purchase of a capital equipment or for a long-term project, or is it for my working capital? Maybe for advertising or to pay salaries just because my customers have not yet paid me, in which case you can go and look at a bank overdraft. When you come to considering equity as a funding option for your business, again, you need to think about it when your business is growing or well established. Financing your business through equity entails that you are selling a part of your business. Your business has to have enough value for other people, other parties to actually buy a stake in your business. And so you can only finance your business through the stock market or through equity if you've built a strong business. You've got a strong balance sheet that investors can look at and can be satisfied that this business is going to pay us dividends and we're going to see an appreciation in the capital in this business. This is what I had to share in terms of ways in which you can finance your business. I do hope you understand how risky it is to lend to a person who's merely got a business idea. And I hope you can focus your energies not on complaining as to why you cannot get money for that business idea, but focus your energy in ensuring that your business idea takes off and it becomes attractive so that lenders and investors can invest money into your business so it can grow and take off into a large corporation. If you enjoyed this video, subscribe right now to this channel and click the bell icon so that you can be reminded whenever I have a YouTube video.